Celsius just reported their latest earnings report. Now, one thing is very strange is the price action of this stock. The stock was up for 6%, then it was down 6%, and at the time of making this video, stock is currently down around 2 to 3%. Of course, it will depend when you're watching this video. The market will open. Also, they have their earnings call when the market is already open, which I found very, very strange. Anyways, currently this company has a market cap of close to $16 billion. If you want to compare it to another major competitor, which is Monster Beverages, they are closer to $60 billion. Of course, the main differences here are the growth rates. For example, with regards to Celsius, the analyst estimates for fiscal year 2024 and 2025 currently sit at 38% sales growth year over year for fiscal year 2024, with another 31.24% year over year growth in fiscal year 2025. If you look at EPS, fiscal year 2024, 36.36% growth year over year. That's over a 2,242% growth in 2023. And then another 43.69% in fiscal year 2025. So yes, you're paying a higher premium because this is a company that is growing quite fast, becoming more and more popular also outside of the United States. They launched in Canada, in the UK, and in Ireland. Of course, I expect them to launch in other countries in due time. Now, the report itself, to me, was pretty good. Sales, huge increase there. EPS was just a miss of 1 cent. Maybe that's the issue again. Maybe during the earnings call, guidance won't be as good as expected. Remains to be seen. I don't know why earnings calls happen when the market is already open, but I'll update you in due time as well. Now, jumping into the report, looking at the highlight numbers for Q4 and then for the full year. Record fourth quarter revenue of $347 million. That was up 95% year over year. And full year revenue came in at $1.31 billion. That was up 102% year over year. So again, tremendous growth by Celsius. This is also a stock that has gone up, what was it, 39,000% in the last 10 years or so. Really a remarkable story to follow and one that I have missed out on. I actually looked at the company again when it was at $50. It was bang on the 200-day moving average. I was being greedy for no reason, didn't buy, and then, well, without knowing, it's back over $60. You live and learn. If the market gives me an opportunity to buy this at a lower price, maybe I'll jump in. But so far, it's on the watch list. Now, of course, do share your thoughts down in the comments below. And if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. If you want to support me even further, do check out the link down in the description and in the pinned comment to get a top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now let's continue and dig in a bit deeper in that report. So as we can see here, revenue in North America actually increased more than overall revenue. That increased 97% year over year for the quarter. International revenue increased 68% year over year, going from $8.7 million to $14.6 million. Gross margin improved by 340 basis points. So again, 47.80%. Quite remarkable. Those are higher margins than the likes of Intel, for example, just to give you another company out there. Net income increased 239% to reach $39.1 million. Diluted earnings per share 17 cents. That's up 242% year over year. And adjusted EBITDA increased 387% year over year to reach $65.2 million for the year. That increased 316%. Now, with regards to international revenue for the year, that increased by 52% to $55 million, driven in large part by successful innovation launches, increased velocity, and brand awareness. Then, as you can see here, the growth trends by revenue by quarter. I mean, since 2020, this thing has really grown like wildfire. Now, you might say, oh, but look at this, quarter 3 to quarter 4. It's down quarter over quarter. Yes, that is true. But if you look at 2022, the same thing happened there. So Q3 to Q4, usually that's what happens. End of the year, winter months, it usually affects a brand like Celsius. And then what happens next? Well, Q1, we usually see a big jump. Then they made a couple of announcements. So first of all, they are now an official partner of Scuderia Ferrari in the Formula One with Palantir, by the way. Palantir is also on the car somewhere here. So Celsius was the #1 dollar and unit growth brand, total US MULO-C in 2023, contributing over $1 billion in incremental dollars and 339 million incremental units. As for the Amazon metric, which is very important, I'll add some comment that someone wrote to me on X. On Amazon, Celsius was the highest selling energy drink with a 19.7% share of the energy drink category, ahead of Monster at 19.6% share and Red Bull 12.3% share. Amazon Q4 2023 sales of $27.9 million compared to $15 million the same quarter last year, that's up 86%. And for the full year, sales of $100.1 million, that's up 72.9% year over year. Now, why is this important? Well, this is basically Celsius showing the physical stores that, look, we are popular, we are powerful, give us prime shelf space. And it makes sense, right? Amazon. You can sell on Amazon if you want. You just have to show others that you are extremely popular, marketing, sales initiatives, brand awareness, etc., etc. Once you show that your sales numbers on Amazon, because it's a level playing field, right? You're competing there with the likes of Red Bull and Monster. And if you can prove to the other stores, to the physical stores, that you are beating those giants, of course, they'll be incentivized to put you into better spots in their stores, which leads to higher sales for you inside their stores. Win-win. Then continue here with some more data. In multi-outlet with convenience stores, Celsius is the #3 energy drink in the United States with a 10.5% market share, more than doubling its 4.9% share in the same period last year. In convenience, Celsius gained an additional 7.5 percentage points of ACV growth to end the period at 96.9%, compared to 89.4% the same period last year. Now scrolling down, you will reach this page right here, number 6. You get revenue, cost of revenue, gross profit, and then selling G&A expenses. As you can see, revenue has increased year over year, so did cost of revenue, and gross profit has increased year over year as well, quite nicely for this quarter and for the whole year. But what is impressive is that they're growing quite fast, and at the same time, selling and G&A expenses have decreased year over year for this quarter and for the whole year as well. We can also see that stock-based compensation is down year over year, and overall total GAAP SG&A as a percent of revenue is also coming down. It's now at 30.8% compared to 62.8% same period last year. You know what this means? This is the effect of big brand awareness. This allows them to continue to grow quite fast without spending the same amount of money as they did before, as a percentage, of course, of the amount of revenue that comes in. It's a great formula for free cash flow generation. And you know what that means for the future if this continues. I'll just show you here what happened with Monster Beverages. Monster Beverages, as you can see, free cash flow per share has increased throughout the years. And what has happened as well, shares outstanding have been decreasing throughout the years as well, which means shareholder value goes up and up and up. And in case you weren't aware, Monster Beverages in the last 10 years, its stock went from around $12 or so, sitting at close to $60 right now. Quite the performance. Closing it off here with the graph, as you can see, before they announced their earnings report, we were at $67.77, which was a previous resistance point. We got rejected there in September of 2023. Right now we are sitting under $65. This is on the daily, by the way. We are also a bit overbought on the daily, not by much, but a little bit. Then with regards to the 200-day moving average, that sits at $52.14, the 51 at 58.14 cents, and the 20-day one sits at 61.54. Here is exactly where I was looking to buy Celsius. Was being greedy. I was like, maybe it will break completely down the 200-day moving average. It did not. It did rebound, and then it went up and up and up and up and up. Lesson learned, and now I'll be waiting maybe for a better entry point. Of course, I'll put in the pinned comment if something huge gets announced in the earnings call, so you get a bit more context to why the stock is going up or down, depending on when you're watching this video. Of course, do share your thoughts down in the comments below. Are you a holder of Celsius? Do you like the brand? Do you like the company? Let me know down in the comments below. If you enjoy this type of videos, give it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.